Welcome everyone to our webinar this morning. We look at future business risks you need to consider as you start to rebuild your business and as we come out of the lockdown. My name is Anna Christie. I'm the Chief Executive for the Sussex Chamber of Commerce. We've all faced extreme financial challenges the last few months. Start to build up our contacts, our clients, our business, and bring people back to work that may have been furloughed or may have been working from home. There are still many risks that we need to consider and many risks that lie ahead. Today, we are joined by Martin Coppard, who's the Director at Sutton Winson Consultancy Services, who will go through how you can protect your organisation. So I'll hand over to Martin.
Good morning, everyone, and welcome to our webinar on future business risks post-Covid-19. My name is Martin Coppard. I've been with Sutton Winson for 20 years now. I've got nearly 30 years experience in the insurance industry, and I'm a chartered insurance risk manager. I'm also certified by the Business Continuity Institute, and I'm approved as a trainer by the Institute of Occupational Safety and Health. So what's the plan for the webinar this morning? Well, we're going to touch on a range of issues. We've got 30 minutes or so, so I'm going to provide just an outline of as many different risks as I can to hopefully get you thinking about how they might affect your own business. We'll have time for some Q&A at the end, so there'll be an opportunity to seek further details, and we're very much available to members beyond this session should anyone want to have a further discussion. I'm going to begin with an introduction to best practice with business continuity planning, as being as prepared as possible for curveballs like a pandemic can make a huge difference to how well an organisation can pull through it. There's various myths out there about business continuity planning, and I'll try to address some of these with you. I'm then going to talk about a number of key areas of risk that we're likely to face in the months ahead. Some of these you may have already begun to consider, and others you may not. But I don't want it to all be doom and gloom, so we'll identify some potential opportunities that we may also be able to take advantage of in this period of uncertainty. So, before we get into the risks themselves, let's touch on business continuity planning. The best way to control risks is first to identify them, evaluate them, and take steps to mitigate them. But it's often difficult to entirely eliminate risks, and so being prepared to respond is also very important. Business continuity planning is not something that only large blue chip companies do. In fact, often smaller organisations are more vulnerable to a serious adverse event. But SMEs are often put off embarking on the process because they're not really sure how to go about it and are worried about the time and resource that's necessary. So plan a realistic time frame to create your BCP. Now, this could be 6, 12, 18 months, or even longer. And agree the scope to be covered. Now, scope might be defined by geographical location, business unit, or product range, for example. Then start by completing a business impact analysis, identifying the various activities and functions that take place, and estimate how long the business could do without each one before the viability of the organisation is seriously threatened. This will enable you to identify your most time-critical activities. And bear in mind that these will often be different from those you consider the most important during normal times. It's these time-critical activities that you need to protect first. Conversely, activities that you could do without for up to 2 or 3 weeks, such as marketing perhaps, require less continuity planning, as you have the time to react after an event happens. Make a note of the resources that support these activities during normal trading, such as hardware, IT, people, and consider the minimum you'd need after an event. Bear in mind that it could be the case you need more, not less resource after an incident. For example, additional customer service staff to field calls from anxious customers. A threat analysis gives you the opportunity to consider the likelihood and severity of the wide range of events which could threaten your business. Don't just consider the standard physical risks like fire, explosion, and flood. Think about loss of key personnel, product failure, cyber attack, denial of access, fraud or scandal, and of course, pandemics. Before building plans, think about whether they're to be strategic, tactical, or operational. Strategic plans are high level and identify the main form of response, essentially what you're going to do, but don't drill down to the how, where, when, and who. Your plan should first consider the immediate emergency response and then move through the continuity phase, maintaining the business at a minimally acceptable level through to resumption as normal. They should also consider what are known as the 4 Ps: premises, plant, people, and processes. After all, it's no good having an alternative premises ready if staff can't get there or if the IT isn't working. Business continuity management is no different from any other management system. The arrangements shouldn't just sit on a shelf and be forgotten about. It's crucial that staff are aware of their role in the event of the plan being invoked. So awareness training is needed. The plan also needs to be regularly reviewed in light of changes in the business or the external threat environment. And of course, there's the scary part, testing. Many smaller organizations shy away from this, but in truth, it's the only way to know if your plan will actually work. There are in fact several different ways of performing a test. It doesn't necessarily have to be a fully blown live rehearsal. Okay, let's now start to think about some of the risks that we might have to face in the months ahead as we move through and hopefully beyond the pandemic. First up, supply chains. A lot has happened in the last 3 months, but we still have the matter of Brexit on the horizon. Before the UK's withdrawal agreement was signed in January, fear of a no-deal scenario prompted many organisations to stockpile goods as a way of mitigating any immediate disruption of inbound supplies. A sensible action to take, but be mindful to check that stock insurance is uplifted accordingly and watch out for increased fire hazards if combustible materials are stored outside the building or prejudicing fire safety features such as escape routes. Storage systems such as racking will need to be able to accommodate additional loads, and access equipment like forklifts must be able to safely retrieve items. It could be the case that increased amounts of liquid capital become tied up in stock as well. Some countries hit hard by the pandemic may turn inwards and prioritise the needs of their own citizens over exports, which could impact on the availability of raw materials. This may be particularly acute with medical products, such as drugs and PPE. Local disease outbreaks may mean the shutdown of production factories for an indefinite period of time. We've already seen this in the UK with meat processing plants and abattoirs, such as the Two Sisters Food Group in Anglesey, in Wales. Territories initiating further lockdowns may disrupt the operation of businesses in the UK, and if staff are absent due to sickness or staff numbers in the factory are restricted due to social distancing requirements, this may also mean that orders are delayed or reduced in volume. With a global recession on the cards, financial failure of suppliers is a very real risk, so keeping a close watch on this is vital. I always urge my clients to look beyond their direct suppliers and into the second or third tier. Your own supplier may be in a strong position, but if they rely heavily on another manufacturer to provide certain components or raw material, you're equally exposed. Things such as strikes and local political unrest, both of which are more likely when an economy is in recession, may also impact on production. Cessation of activity at shipyards in China has been a cause for concern. This will cause a delay in the retrofitting of vessels to comply with the International Maritime Organization cap on sulfur emissions, with the potential outcome that some vessels cannot be used for some time. It may also mean that some vessels miss dry dock assessment reviews. Organizations need to be mindful of this when chartering new vessels and ensure that those vessels are compliant with international regulations. There's also a potential problem regarding the receipt of deliveries depending on the conditions of carriage in place. It's normal practice for the receiver to sign to confirm receipt of goods in satisfactory condition, but in the current climate, where contact-free delivery has become a feature of the fight against spread of infection, things have changed. The receiver may therefore authorise the driver to sign the proof of delivery form, but in such circumstances it's imperative that the driver has express authority to do so and makes a record of the full name of the receiver who gives this. Even so, in the event of a dispute, it would be difficult for the driver to evidence the authority they were given by the receiver, as this would only have been communicated verbally. The practice could also, depending on the terms in place, amount to a breach of contract, an impact on the payment of freight charges, or create a liability to pay liquidated damages. Now turning to finance, and most of us will remember the crisis in the financial markets and subsequent recession in 2008. This triggered a tightening up of criteria for lending as banks became extremely risk averse. The causes behind the recession are very different in 2020, but familiar risks are still there. With unemployment set to rise significantly, the ability of individuals to meet mortgage and loan repayments will be put in jeopardy, and businesses, particularly those in sectors such as travel, leisure and hospitality, may struggle to pay creditors. In the insurance industry where I work, we've already seen a significant increase in requests for premium finance as policyholders seek to spread the cost of their policies over monthly instalments in a bid to retain as much cash as possible. As well as dealing with a large backlog of loan applications, lenders have, as expected, underwritten these requests with far more scrutiny than before, in some cases asking specific questions around the organisation's ability to survive through the COVID-19 lockdown period and beyond. For many businesses, cash is key at the moment. Many have doubled down on the collection of monies owed from customers and have reduced credit periods, wary of potential bad debts. This action, of course, has a knock-on effect to the customers who are already under similar pressure themselves. The fear of insolvency is real, and I can remember having clients back in 2008 who failed not because of a bad business model or unprofitability, but a simple lack of cash. The sudden cut in overdraft facilities in particular saw some small businesses disappear with little or no warning at all. Construction is an area expected to come under particular pressure. A recent construction line survey found that 62% of responders had suspended work as a result of COVID-19, and well over a third predicted they will experience significant financial difficulties this year. Some firms may struggle to meet completion dates with the consequential financial penalties and could be anxious about their ability to fulfill long-term projects due to a lack of cash. Manufacturers have mentioned concerns about surviving on debt, and some are considering turning to equity to enable them to continue to invest in machinery, equipment, and materials. A few words now on insurance. Having worked in the industry for almost 30 years, I've seen some ups and downs in the market. The insurance market is cyclical and moves from soft to hard, usually over the course of a few years, although we've experienced perhaps the longest soft market in history for around 15 years now. What this has meant in practice is that there are plenty of insurers competing for business and relaxing underwriting criteria, pushing premiums down, but the opposite is true when the market hardens. Insurers often generate little or no underwriting profits and rely on investment returns from the monies received from policyholders. A downturn in the stock market can therefore have a similar impact to a sudden major claim-inducing event such as a storm or floods. An economic recession usually also translates into higher numbers of claims, as some people suffering financial hardship turn to crime. Vacant buildings can be a target for squatters or arsonists, and spurious home and travel claims or personal injury claims tend to rise. So it's an unfortunate reality that harder economic times are often combined with higher insurance costs. At present, financial lines covers like directors and officers liability and professional indemnity are seeing the steepest rises. Rate increases of up to 25% are being seen on the former, due to actual or anticipated wrongful acts such as trading whilst insolvent or misrepresentation of accounts. Professional indemnity, or PI, has become increasingly hard to obtain at anything like a competitive rate for those in the construction industry post-Grenfell. due to the obvious concerns over the design and construction of buildings with combustible cladding. Insurers are generally offering lower limits of cover combined with higher excesses. After 2008, independent financial advisors found PI insurance a massive challenge after a number of investment portfolios, particularly those involving commercial property, failed, and the floodgates opened to claims from clients alleging wrongful advice. There is anxiety in the insurance industry again today as the Financial Conduct Authority instigates a test case around the validity of business interruption claims, the majority of which have been declined based on the interpretation of the policy wording. Were there to be a ruling against insurers, the total claims bill could put some major carriers in jeopardy. A reminder of the failure of the independent insurance company back in 2001 and the fallout that followed. For businesses with a fleet of vehicles, motor insurance rates are rising by around 5 and 7% per annum as insurers continue to make an underwriting loss. It's true that there was less road travel during the first part of the UK lockdown, and one personal motor insurer, Admiral, actually gave all its policyholders a £25 rebate. However, there was also a significant increase in speeding offences, and changes in the transport environment ahead could have implications which I'll return to shortly. COVID-19 has already provided a headache for HR managers in terms of arranging home working, helping staff struggling with isolation, and preparing the workplace for a COVID-safe return. Thus far, we've largely been dealing with things in the moment and reacting to the latest government guidelines as the situation has been fluid. But the longer-term implications associated with employee mental health and well-being remain to be seen, and while some employees have thrived on the flexibility that home working provides, others have struggled immensely with the lack of social contact or the stress of trying to complete their work in an unsuitable environment, perhaps with young children or housemates creating distraction or disturbance. Home working was only one sudden change thrust upon people. Employers have looked to adjust working hours and shift patterns to enable staff to commute, avoiding peak times, rearrange the workplace to enable social distancing, and not to mention grapple with the furlough scheme and decide which staff to place on leave. It's possible that employees will seek to use this precedent to request more permanent flexible working, and employers will need to be prepared for this and consider how their future workplace might look. It's also expected that some employees will no longer want to travel to work, or may have adjusted to the 80% furlough pay and no longer want to work 5 days a week. Others may even want to talk about taking early retirement. There's also the possibility that allegations of wrongful employment practice may emerge down the line, perhaps from staff feeling that the decision to place them on furlough was prejudiced, or alleging that they were asked to perform work tasks whilst on furlough. Having all furlough paperwork in order will be essential, as the rumours are that HMRC will be looking to recoup whatever they can from employers who have not followed the rules or aren't able to provide adequate justification for a decision to place staff on the scheme. There could be an allegation from an employee that they suffered adverse mental health as a result of an alteration to work practice and did not receive adequate support from the employer. Consultation between employer and employee is vital, as well as regular ongoing communication throughout any period of home working. Do they need any equipment to make their setup more comfortable? Do managers know how they are feeling or coping day to day? The outlook for the UK economy is pretty dire, at least in the short term, and with job security at risk and bonuses and pay rises on hold, we should anticipate a less motivated and hence a potentially less productive workforce. HR should therefore be ready to address poor performance in the usual, compliant manner. For some sectors, travel, leisure and hospitality in particular, tough decisions will inevitably need to be taken once the furlough scheme tails off and eventually ends. Revised business plans will try to anticipate how quickly visitor numbers will return to something like normal, and budgets will be adjusted accordingly. It will be a difficult balancing act between cutting costs as far as possible but holding on to valued staff in order to avoid unnecessary recruitment expenses if business picks up faster than anticipated. If redundancies are unavoidable, it will be crucial to follow the correct procedures in order to avoid claims for discrimination, wrongful dismissal, and the like, in addition to the direct costs of redundancy payments. And staff holidays could become a real headache. If an employer refuses or cancels a holiday request because the employee is visiting a country that requires a 14-day quarantine on return to the UK, would that be reasonable? Well, it would most likely depend on the workplace and job in question, and whether or not the job can be performed easily from home. So, we touched on motor insurance earlier, and I now want to add a little more about the risks to our commuting staff and business drivers out on the road as we all begin to return to work. During lockdown, public transport was initially restricted to key workers and train capacity was reduced, most notably on the London Tube network. Although those restrictions may have eased a little, social distancing requirements and the dangers of coming into close contact with infected people in confined spaces has led to many returning to the car as the most preferable means of transport. This may lead to our roads, particularly in urban conurbations, becoming even more congested than in pre-COVID times, meaning not only travel delays, but an increased likelihood of accidents. We will undoubtedly see a rise in what we refer to as vulnerable road users. This could be young, elderly, or novice drivers who lack experience or confidence, or cyclists, given that cycling has seen a surge in popularity since March. The dangers posed to cyclists when sharing urban road space with commercial vehicles are nothing new, and the fear is that we will see a rise in vehicle-cycle collisions. As some parts of the supply chain have come under increasing pressure, such as food deliveries, some operations have been working flat out to match demand, and this pressure is filtered down to delivery drivers. Supermarkets, in a bid to meet a surge in demand for home grocery deliveries, have recruited large numbers of new drivers, some looking to supplement their income whilst on furlough, and who may have little familiarity with commercial vehicles. Driver fatigue can have fatal consequences, and a case recently came to court involving 2 employees of a rail industry contractor killed after the driver was believed to have fallen asleep at the wheel. Minimum daily rest periods are required under the working time regulations, which for an adult is 11 consecutive hours. Both employees were on 0 hours contracts, which incentivized them to accept work when they were too tired, whilst one was also on an apprenticeship scheme which made him reliant on his employer for his future livelihood. It's essential that employers monitor the working hours of their drivers carefully and adhere to these, even where the employee is asking for additional work. Car sharing has been increasing in popularity, but with the increased risks associated with being in close proximity to others, particularly in an enclosed space like a car, this has become a problem and meant that some staff have had difficulty getting into the workplace. When driving for work, where staff need to travel together in connection with the job they're doing, then precautions such as the use of face coverings, sitting as far apart as possible, opening windows to allow fresh air ventilation, and regular cleaning are recommended precautions. For those for whom overseas travel is a regular necessity of normal business, the past few months have seen frequent changes and restrictions as the virus spread and individual countries took unilateral measures to contain it. Back in the early spring, the Foreign and Commonwealth Office advised UK nationals against all non-essential international travel. Furthermore, increased border restrictions, quarantine requirements and lockdowns have made any overseas travel a far less straightforward experience. Restrictions have eased a little into the summer, and travel bridges created to enable visitors to travel to and from certain territories without the need to self-isolate for 2 weeks on arrival. However, with flare-ups anticipated around the globe, there's always the danger that the city being visited will suddenly be put into lockdown, meaning staff could be missing for an extended period of time and incur increased costs which may no longer be reclaimable from travel insurance. Even the initial task of finding and booking a flight may be far more difficult than before, with aircraft grounded, staff furloughed or laid off, and airport staff shed. The number of flights available may be far fewer than we've become accustomed to, and the prices may be much higher. Staff may be reluctant to travel to certain areas where there has been, or there is feared there could be, a sudden resurgence of the disease. And the stringency of local rules or precautions, be they perceived as too onerous or too lax, may deter visitors from making the trip. It goes without saying that where sales and other staff can conduct client meetings effectively via video conferencing, this method will be adopted. Many of us have become accustomed to these virtual meetings over the last few months, and for many they have proven very effective despite any preconceptions. However, Client relationships are important, and when it comes to building rapport, there is no substitute for visiting in person and the social opportunities that that brings. I'm going to touch on cyber, but I know that the Chamber are planning a cyber and digital forum in due course. I won't go into too much detail. Moving from an office to a home working environment creates additional risks, which essentially boil down to the fact that it's much more secure to connect to company systems on site via company equipment than it is to connect remotely. Connecting remotely may allow malicious actors to access a system as well as genuine employees. Measures such as two-factor authentication and use of VPNs can mitigate this. But allowing employees to use their own computers, phones and tablets means you have a lot less control over the device security and what other programs might be on it. Encryption and antivirus software can and should be enforced on these devices. There's also the question over whether the home internet network of the user is secure, as this can provide another route for malicious persons to access the company system. And if employees are connecting on public Wi-Fi networks, these are even less likely to be secure. Using new software such as video conferencing and web chat facilities can open up new vulnerabilities. This was particularly bad when the pandemic started, as these applications had a sudden influx of users and some were criticised for data leaks and a lack of end-to-end encryption. It still holds true that the more services you use, the more weak points you will have. It could also be said that it's potentially easier for a malicious employee to operate undetected from home rather than in an office environment. Plus, our file checks, dual sign-offs for payments, etc., being maintained in a remote working environment. There's also been a lot of talk about an increase in phishing emails purporting to be the government, NHS, or World Health Organization giving advice on coronavirus, pretending to sell drugs, masks, or other PPE, and of criminals creating fake versions of the COVID-19 contact tracing apps. Cyber criminals will no doubt tailor their scams in line with topical developments in the pandemic response, and organizations will need to keep a close watch. Finally, a lot of companies are changing processing and delivery details out of necessity. This also creates an opening for fraudsters to impersonate organizations and then divert goods or funds, claiming that they have new procedures due to the pandemic. This isn't strictly a cyber issue, but it often originates from a mailbox compromise, where a fraudster hacks a company's email account and uses that to impersonate them. I want to watch out for recruitment fraud. This is a growing trend where a fraudster creates a fake job listing in the hope of garnering either money or personal data from applicants. A lot of my work is in the workplace safety area, helping clients with risk assessment, creating policies and procedures, and delivering fire and safety training. I'm very conscious that over the last few months, everyone's attention has been focused on the risk of infection and transmission of the virus. And as workplaces prepare for reopening, the aim has been to make them COVID safe. Of course, this is very important, but it's also important to remember that other hazards still exist, and the employer's legal obligation to assess and control these hasn't gone away. Particular care should be taken when reopening a workplace after a period of full or partial closure. There are increased risks from things like Legionella, as the bacteria can grow in standing water at a temperature of between 20 and 50 degrees C. If water systems in the premises have been largely redundant during the period of lockdown, there's an increased risk that the bacteria could have multiplied to hazardous concentrations. So systems should be thoroughly cleaned, flushed, and disinfected. Machinery may have been taken out of service or been unused during lockdown, and the restart process may require electrical and mechanical isolations to be reconnected, fluids to be refilled, and plant and equipment to be re-energized in a specific sequence or order. Planning for this should therefore be based on manufacturer's instructions, commonly accepted technical guidance, and include reference to specialist contractors where required. All machinery safety devices such as guards, interlocks, warning alarms, and emergency stop functions should be checked and tested by a competent member of staff to ensure they're working correctly before work begins. All such checks should also be formally recorded. If new working practices have been introduced to accommodate the risks posed by the virus, you might find that your staff can no longer adhere to your documented safe systems of work. Remember, whilst COVID-19 has presented some new and unexpected challenges for workplace safety, it doesn't mean that other significant risks are no longer a concern. If your safe systems of work rely on close supervision, for instance, you'll need to maintain this standard. If this is impossible, amend the methods of work accordingly. With the potential for increased sickness and staff self-isolating at home, the remaining workforce may be under pressure. As such, this could increase the likelihood of accidents due to fatigue, loss of concentration, or staff being tempted to remove protective devices in order to speed up a process. You must therefore make sure that staff are aware that usual safety protocols aren't to be compromised, and that you ask managers to keep a close eye on individual workloads or any staff showing signs of stress or tiredness. If you're short-staffed, you may be inclined to ask workers to multitask in order to cover the role of absent colleagues. However, it's important that you don't ask or allow staff to operate machinery if they haven't been properly trained and signed off as competent to do so. At this point, it's just worth me pointing out that there are a number of free resources available on the COVID-19 section of our website, including a free webinar discussing how best to look after the mental health of your employees, and practical advice on the reopening of your workplace. That can be found at www.suttonwinson.com. So we've talked about various difficulties and disruptions that potentially lie ahead, but it isn't all bad news. Maybe there were one or two opportunities for us as well. The hardest period of lockdown is hopefully behind us, but with the risk of virus spikes, the prospect of localised action, such as seen in Leicester, for instance, is still there. Enforced downtime, however, can present an opportunity to complete tasks that might be inconvenient at other times, such as a refurbishment, a full deep clean, or a general clear out of clutter. I know of organisations who have used the time to focus on marketing or development initiatives to help ensure that they hit the ground running once things return to normal. And one client has had a number of employees make significant progress with professional training and qualifications during the period when customer inquiries were at their lowest levels. We all hope that our businesses emerge from this period in the best possible shape and ready to take advantage of new opportunities. Remember that some of our competitors' service levels may have fallen short, and those organisations best prepared may take advantage. With redundancies expected over the summer and autumn, it's possible there may be some talented people on the jobs market. If we do have any vacancies to fill, the pool of high-quality prospects may be larger than before. The extraordinary prospect of negative interest rates has been speculated about, with the Bank of England base rate already at 0.1% as of 1st of July. While low rates reduce the value of the pound and make imports more expensive, it can be good news for businesses exporting overseas. Negative rates are designed to encourage consumers and corporations to spend and kickstart the economy back into gear. Organisations that have cash in the bank may look to invest this in new machinery or other capital spending rather than see their money in the bank stagnate or fall in value. And nobody can dispute how COVID-19 has pushed many of us a fair way forward in terms of technology. Even those non-believers with well-set preconceptions about video conferencing services, remote working and online web chat facilities have come to accept these as part and parcel of a new way of working. And I think some of us have also realised how much time and money we spend travelling to meetings that can quite easily be delivered via the likes of Zoom and WebEx. Time will tell, but plenty of employers are reporting that staff are being more, not less, productive at home and thriving on the flexibility that this arrangement offers them. So just to finish off before we take any questions, Sutton Winson are offering Sussex Chambers members a free 1-hour risk consultation to discuss some of the issues raised today a little further, insofar as they relate to your own business. This is available for the next 3 months, so by all means, feel free to get in touch with us if you'd like to arrange this. Okay, thank you everyone for listening, and we'll now take any questions.
Thank you very much, Martin. It's fantastic that you said you're providing that free 1-hour risk consultation. So just a reminder for our members, and I know there was a question here from Sarah about the chambers and how we're adapting to enable more networking opportunities for membership. We are holding these webinars, so there's an opportunity for members to share best practice, top tips, just like Martin has done so now, but also through online services. So members, you can have your member-to-member offers. You can update that as regularly as you want to by just logging in to your account through the website. Put your member-to-member offer there. These are picked up as well. We pick these up on social media and share these. There's also news blogs you can send to us to let us know what you're doing. You've got a new initiative. And through the webinars, we have been running several webinars throughout the last few months as well, and we will continue to do so until we're in that situation where people feel safe having face-to-face networking events, but also that there's the venues are also adapted and that they have the processes in place, the risk assessments in place, so that we can go to the venues. But at the moment, for the next, until the end of October, all of our webinars will, or networking events will be virtual. So we are looking at how we can expand this continuously. So hopefully that's answered your question, Sarah. But it depends on the level of membership as well. There are other ways in terms of how you get your business reach out there, whether that's through, as I said, depending on the level, whether that's through our Business Edge magazine, sending us editorial, whether it's sharing top tips, whether it's having a dedicated page, you could, and there's also sending us corporate videos. So have a look at the benefits of your membership. We've also introduced other benefits such as a finance finder to help businesses navigate the landscape and help access finance as well, whether it's grants or equity or loans or whatever that may be. So we're always looking at continuously enhancing our membership. And one thing that I did put on the chat that we've just launched, or just about to launch today actually, are 4 free training courses, fully funded. It's a partnership with East Sussex College Group. Anyone can undertake these. You don't need to be a member. It's fully open to everybody. And there's 4 training courses, one on mental health, first aid. There's also lean management, equality and diversity, and digital skills. So there's an opportunity to develop skills in the workplace for employees and for any staff that may still be on furlough. So I'm just going to see if we've got any questions, Martin. Right. So Clive's asked, what rough costs apply for consulting support for SMEs?
Okay, yeah, I mean, it does really depend on what you're consulting on, you know, whether it's business continuity, safety, HR, etc. But I mean, to give you a rough guide, I think a decent consultant will probably charge in the region of around about £400 or £500 for a day's consultancy. Now that could be a few hours on site with the company and include you know, disbursements and writing up of reports and things off the back of that. But there's quite a variable in the market. It's worth you know, having a look for someone who you think is a good fit for your business and understands your business as well, because there are a number of consultants out there that are quite generic and don't really have a good practical understanding of the businesses that they're talking to.
I think Clive also added another point, and to create a BCP plan, a business continuity plan.
Yeah. Okay. Again, it depends. I mean, to give you an example as about how we work in that respect. I mean, I've worked with some clients who want me to go in and help them build the plan from scratch, from start to finish. And we usually do that over a series of workshop sessions with a team of people. Maybe sort of 6 to 8 workshop sessions of a few hours over the course of a few months, including all the writing up, and that usually costs in the region of £3,000 for the entire project. Other organisations use us to dip in and out, go in and review their progress at different periods of time. We charge a rate of £500 per review session, because some organisations have experience of doing this and I feel slightly more confident maybe than others do. They're happy to kind of get on with it and just bring a consultant in sporadically to kind of sense check what they're doing and sort of play devil's advocate to what they've produced. So yeah, but again, it's there is some variety out there, but pick someone who is qualified in business continuity and has a good understanding of your particular industry.
Thank you, Martin. I was just putting some comments just to see if we could get some conversation going. So I was just going through your slides when you were talking as well, and picking up on each point that you made. So in terms of the supply chain, I know that we're going to, for those that are importing supplies and goods from the EU, when it comes to the 1st of January, there will be changes in processes such as customs declarations, which the chambers will be providing nationally. But this is going to mean a change in terms of import duty, VAT, and added costs, which are likely to be passed down the supply chain. So those are some of the risks that will come in as well when we exit the EU. Also, when we exit the EU, there's the new immigration points-based system. And I didn't put this in the comments there, but there will be processes employers need to take in terms of becoming sponsors to allow EU workers to come in, and there may be costs and delays from government, so we're actually lobbying government to make sure this is a smooth process. We're likely to see a lot of redundancies, or we have seen a lot of redundancies and likely to see a lot more as the furlough scheme comes to an end and businesses start to think about restructuring or making people redundant. So we have to look at how can we reskill or upskill employees to really get them to fill positions that they may not be able to fill now from the EU. I don't know if you had any further comments at all on that, Martin, about the EU and Brexit and everything.
Well, only really to say that I think when you consider everything that's going on at the moment, the pandemic situation plus the looming end of year deadline on Brexit, I think it's, well, I can't think of a more uncertain period in business for, well, forever in my lifetime, to be honest with you, and so many unknowns still as well about exactly how things are going to pan out. But yeah, I mean, I echo everything you've said there. It's going to be a very challenging and interesting time.
Yeah, I think we've also got to make sure that for any businesses that are exporting goods, one thing that we saw last year when it was all the Brexit discussion, we saw an increase in terms of stockpiling, and certain businesses hadn't considered their insurance to make sure that their warehouses could cover the additional stock. So we could see an increase again in stockpiling before we exit the EU because of the changes in how we import-export goods will come about. So we could see that, but it's just making sure businesses consider the insurance risks when they're stockpiling and keeping all of the goods and supplies and everything.
Yeah, I mean, I touched on that in my presentation, and I think it's that's definitely a consideration, and I think also potentially with other goods that people perceive could be in short supply as a result of the global situation at the moment could lead to some stockpiling as well. So it's important that where there is an increase stockholding on site, do think about insurance, do talk to your insurance brokers, let them know, because you don't want to find you're suddenly uninsured when something serious goes wrong. So yeah, it's just one of those things to keep in mind.
Definitely. On the finance section, something that was raised at our construction forum earlier this week, we had a construction forum on the stability and on the financial risks. And a lot of construction companies now are, if they're tendering for projects, they're being asked to consider the full length of the project, what other projects they have, in terms of can they financially manage to actually tender
Mm.
project? Do they have that financial standing or the backing from their banks? Have you seen this
Mm.
more and more as well?
Mm. Yes, I mean, I was talking to a client of ours the other day who's been run a successful small construction business for a number of years, and this is all of a sudden things have just gone completely quiet. And that particular firm are finding it extremely difficult. And yeah, you're quite right. I think with these longer term projects, they are the worry is, have they got enough cash to see the project through? Yeah, I mean, I touched on the construction line survey in my presentation, and there's some interesting further data on the construction line website in terms of the feedback that's coming in from members. And yeah, it's a difficult phase for them.
I did ask a question here in terms of premiums and rates for insurance. Do you think businesses are likely to see an increase because of what's happened this year, or just the changes in terms of the clauses and limitations, pandemics being excluded, for example? Are we likely to see an increase in rates?
Yeah, I think it's very likely that the general consensus is that we are on the verge of a new hard market in the insurance industry. We've had about 15 years now where the market's been pretty soft. There's been competition amongst insurers, and rates have been driven down, and there's been continuing flexibility over terms, but things are changing, and it is an unfortunate reality that usually the insurance market moves at the opposite to the economic cycle. So when economic times are tough, usually the insurance market is quite tough as well. We've been seeing motor insurance rates kind of creep up in the last few years, and we're seeing big increases in directors and officers liability insurance, professional indemnity insurance, and there's a feeling that we are going to be moving into a phase where rates are going up across the board. How quickly or in which specific areas initially are going to be most effective, we will have to wait and see. But as I say, those financial lines covers at the minute, professional indemnity, directors and officers liability being particularly hard hit. So my advice there is, when your insurance renewal is due, try and plan ahead. Talk to your broker nice and early, a good 3 months before the renewal date. Start to get your story prepared in conjunction with your broker, because it's all about, in a hard market, convincing the insurer that your particular organisation is a better than average risk of its type, and to try and justify the terms that you think you deserve.
One thing we're also seeing is there's been more home working because of the lockdown, and businesses are looking at whether they need to go back to their large offices and maybe have more home working, or go to more shared office or hot desking, for example. So I think that landscape will change it in terms of the insurance wise, looking at the more shared office space rather than, people taking up larger buildings.
Yeah, quite possibly. I mean, we're kind of living this in the moment, aren't we? And I think when lockdown first happened and everyone was kind of sent to work from home, a lot of people thought, "Oh, this is great. No more commuting. I'm saving time. It's a more pleasant working environment. I'm getting more done. It's great." I think as the months have gone by, and I include myself in this example, it's at the point now where I think there are a number of people that are quite keen to get back into the traditional workplace and be around colleagues, and just feel more at work, perhaps. I think for some organisations that kind of the sort of networking that goes on internally with colleagues, just picking up on what other people are doing and what opportunities are around in the organisation, that feeling of connectedness, perhaps people are missing a little bit. So I don't know whether home working will be as big a thing as some people are suggesting it could be, but certainly there will be some changes. I'd make the point, you mentioned hot desking there, and just as a short-term issue with that, because I know that some clients of ours are starting to bring some people back into the office. If hot desking is taking place at the moment, please, you've got to be extra vigilant with cleaning,
Yes.
things like keyboards. The PC keyboard is one of the dirtiest places in the office. That's a statistical fact. Between users at a workstation, if it's a hot desk, clean the keyboard, clean the telephone, work surfaces. Obviously really important at the minute. It's important in normal times, to be honest with you, but it's obviously especially important right now.
Definitely, and if we can avoid hot desking, we should do that, and that's what we've done in our office. Yeah, no hot desking at all.
Yeah.
I think the 14-day quarantine that has obviously been introduced because of Spain or parts of Spain being in lockdown and people coming back from the holiday, I think that's going to cause quite a few issues for staff and for business in terms of where they stand. There's going to likely to be some HR complications, because it could have been that they've returned to work, then they've gone on holiday, but they may have the tools and equipment they need to work from home. So do they have to quarantine? Are they going to get paid for that? I think I can see that becoming a little bit of an issue, and maybe other countries are starting to show signs of an increase in symptoms. So we could see more countries doing this as well.
Yes, absolutely. Again, this is a moving feast, isn't it? With 1 week, it's one country that's on the the watch list. Like obviously Spain at the minute is the one people are talking about. Some people have rumoured that France and Germany maybe could be an issue in weeks to come. We don't know. And yeah, it's a massive HR headache. If you've got people coming back from a holiday to Spain and they've suddenly got to quarantine for 2 weeks, can't get to work, and if they can't do their job from home, what does that mean from an HR perspective? And obviously, it goes without saying, from people's personal perspectives, the headache that it's giving them. Should we go on holiday? Should we not? People are going on holiday in August, mid-August, coming back. The kids would go back to school usually first week of September. Do they have to quarantine for 2 weeks and miss 2 weeks school on top of what they've already missed? All sorts of things going on. But yeah, it's we don't know, do we, how the virus will spread or spike in different parts of Europe. We're talking about Spain at the minute. It could be other countries next week.
Yeah.
We've just got to keep abreast with what's going on. And I would say, just if you haven't booked a holiday, just be cautious about what plans you make.
Yeah, and also look at the insurance and before you book anything, just to make sure you can get a full refund. If something happens. Yeah.
Yes, yeah. And obviously travel insurance in relation to the COVID situation. Now, you're unlikely to be able to take out a travel insurance now that covers you for cancellation because of COVID, because it's a known. It's no longer an unfortunate event. It's an expected event, essentially. So whilst you're more likely to be able to get cover for medical expenses and things whilst you're overseas, cancellation cover is going to be much harder to come by. So yeah, think carefully before you plan any trips.
We spoke about hot desking, but you also mentioned car sharing, and it's not something we should really be doing at the moment because of that social distancing. Over the last few months, we've seen a decrease in carbon footprint. If anything, we might see an increase because people can't do the car sharing. And there's lots of talks about all the councils and government looking at how we can reduce our carbon footprint and looking to bring that to net zero. So we see this now increasing because of that social distancing, really.
Yes, absolutely. And my reference to the car sharing was also thinking about people that have to work in teams at work. So, for example, utility contractors that travel around in teams of 2 to do the jobs they do. They have to travel together usually. So that's an issue. And you're quite right. We don't really want people close together in a confined space like the cab of a vehicle or a car. And yeah, we've seen a lot of people turn to the bike, haven't we, since March? Bike sales went up substantially, and we've had these temporary cycle lanes put in different places on the highways, which is great from a carbon footprint point of view. But I don't know, when we come to October, November time, whether the bike will still be as attractive a proposition as maybe it's been through the summer. But yeah, we may well see an increase in people in their cars on the roads. And I know I mentioned about potentially novice or vulnerable road users, people that don't maybe drive, usually returning to the car, inexperienced drivers, people inexperienced driving larger vehicles. You know, I mentioned the supermarkets were having a big recruitment drive on delivery drivers, and some of those drivers have never driven a 7.5 ton vehicle before, so they're going to be slightly more or slightly less confident than other people that are familiar with those vehicles. So yeah, to be wary of problems on the road.
I don't know how many people would want to cycle with the autumn winter coming up, and how many businesses have facilities for staff to get changed or showered and things like that. So you can see that, like you say, decreasing, more people taking to the roads because we can't car share, and there's still social distancing, wearing a face mask or face covering, should I say, on public transport, and there may still be a lot of anxiety about going on public transport. So I think we might see an upturn in car usage, unfortunately. Yeah. I'm just seeing if there's any other chats. I know you mentioned cyber. We did have our cyber forum a couple of weeks ago. So if people are interested, if they could just contact us, we'll be happy to share that. Haven't seen any other comments or anything, and I don't know if anyone's got any questions. They want to unmute themselves and ask Martin any questions about their business continuity plans. I can see him unmuting himself. Hi, Clive.
Hi, Martin. Thanks very much for your help. My question is to do with insurance cover for future spikes. Many small firms are extremely concerned that, having paid for general insurance and not had any cover because it wasn't specified, how do they get cover for future spikes?
Are you talking about business interruption cover for the inability to trade? Yeah, it's going to be, I mean, there is this test case going through the courts at the minute in relation to business interruption claims, and we'll have to see what the outcome of that is. But from the insurance industry's perspective, the intention was never to pick up the economic consequences of a pandemic. Now, usually a standard business interruption insurance policy is there to provide loss of profit or loss of income following a physical event that would be insured by your material damage policy. So a fire, flood, storm, such like, okay. Occasionally, some business interruption policies will provide cover for non-damage, the consequences of non-damage scenarios, and occasionally they will provide cover for specified diseases, but those diseases have to be specified and also they have to relate usually to an outbreak actually on the business premises rather than just a general outbreak in the community. So the test case is going through court at the moment, which we'll see what the outcome of that is. But going forward, in terms of new policies written, I mean, that's the insurance industry is not going to offer cover for something which is, I say, if not inevitable, very highly likely. Okay, that is not the way that insurers look to operate their policies. It's there for unexpected, unintended events. With the situation with COVID as it is, you know, you might say that the chance of another spike happening in the future is, if not likely, it's probable. And the insurance industry isn't.
Many small firms would see this more like akin to a motor insurance policy, whereby accidents do occasionly happen, that it is therefore forecastable, but they can get insurance against accidents happening for their vehicles. Isn't there a good case to be made that this should be happening with business interruption cover for pandemic?
All I would say is that the insurance contract is a contract. It specifies within the policy wording what it's intended to cover, what it's intending not to cover. Now, speaking as a consumer, if you like, if I buy insurance, I buy it thinking that it's going to pay me if something goes wrong. But like any contract, there are extensions, conditions, exclusions, and it isn't intended to be a catch-all. obviously I work in the industry, so I'm trying to give a balanced view, and I'm trying to, obviously I can appreciate it from the consumer's point of view as well as the insurance company's point of view, but always read your policy wording and always know what you're buying as cover when you take it out. You know, get your broker to take you through the policy wording, to explain the key exclusions, warranties, conditions. It's important to know that. At the time when nothing is going wrong, it seems like a very boring task to sit down and read a policy wording with your insurance broker. But for the sake of spending 20 minutes, half an hour doing that and just getting familiar with some of the key features of it, it will help you understand the cover you've got. So yeah, obviously it's very difficult for a lot of organizations that are suffering from the inability to trade or trade anything like normal levels at the minute. But you know, the insurance contract is what it is. It's a contract. We always say to people, do try and read your insurance policies, and again, very few people do, but try to have a look at it when you take it out, or talk to your broker and get them to give you a summary, because it's much better to be informed up front about the limitations of it.
Thank you so much. We've now come to the end. I can't see any further questions today, but thank you so much for your time today, Martin, and for everybody for joining us today.